Two traders opened the exact same trade in leverage trading crypto. One made profit, the other lost everything. Why? The answer isn't luck. It's crypto leverage trading. And if you don't understand what is leverage in crypto trading, you're trading blind. And yes, there's a hidden promo code in this video. Leverage lets you control a larger position with a smaller deposit when you trade crypto with leverage. Here's a simple example. You have $100. With 5 times leverage, you can open a trade worth $500. But here's the key. Leverage doesn't change the market. It changes the scale and speed of your gains and your losses. Let's compare two traders, Jane and Leo. Both opened a long position at $100. Both used $100 as collateral, but Jane chose 5 times leverage. Leo chose 50 times leverage. The price dropped just 5%, from $100 to $95. Jane's result. Her position size was $500. A 5% move means a $25 loss. She lost part of her money, but her trade stayed open. Now Leo. Leo's result. His position size was $5,000. The same 5% move equals a $250 loss. But here's the problem. Leo's collateral was only $100. The loss was bigger than his entire deposit, so the exchange closed his position automatically. Leo didn't just lose a bit, he lost everything. This is called liquidation. In low volatility, sideways markets, prices barely move. Without leverage, it's hard to make meaningful profit. Leverage amplifies your wins and your mistakes. Start with 5 to 10 times leverage to protect your account. Once you understand risk management, higher leverage becomes a strategy. Want to trade smarter? Watch our full stop loss and risk control series. Hit subscribe and don't miss your bonus promo code.